Render unto Caesar what belongs to Caesar. All the rest belongs to BlackRock. Visa, Amazon, Tesla, JP Morgan, and Berkshire Hathaway. All these well-known companies have one thing in common. They are all majorly owned by the same conglomerate. BlackRock is the world's largest asset manager, overseeing approximately $11.58 trillion in assets globally. They invest in a vast array of companies, but also invest into gold, real estate, and bribery to state officials. Over the time, BlackRock has become the main or second shareholder in 99% of American companies, if not anywhere else in the world. So, how did we reach this point, and who is his CEO, Larry Fink? The short answer being that no one actually gives a fuck. What captivates our attention is belief that BlackRock is in a crusade to enforce uniform ideas and strategies, pushing companies to repeat the same errors over and over again. However, if this phenomenon exists, it must be the result of deliberate decisions by certain individuals. Otherwise, it wouldn't be happening. So the question has never been whether BlackRock owns everything, but rather who owns BlackRock. First of all, it is not Larry Fink who owns BlackRock. He is simply the executive responsible for answering to shareholders. To uncover who the actual shareholders of BlackRock are, I spent about 10 seconds looking it up on Yahoo Finance, since this information should be public. And here's what I found. Among BlackRock's major shareholders are Vanguard and State Street, which are essentially BlackRock's counterparts, along with, of course, BlackRock itself. So, it seems like the companies who own everything apparently also own themselves, and you are still left wondering who owns them. Let's get back to the beginning. In a company like Disney, for example, it is the board of directors who chose to produce all those disappointments. But this board is selected. So it's the shareholders, BlackRock being the biggest one, who voted for this strategy instead of another one. Anyway, what we are trying to figure out is who is at the top of this shareholders voting food chain. So, if you take all the identifiable owners of BlackRock over the last 15 years and put them in Excel and represent their shares proportionally in a square, it would look roughly like this. But the problem is general. The majority of owners are institutions, which themselves are owned by other institutions, often being BlackRock itself. Trying to uncover who is in charge is like playing Monopoly with 10 people, all using the same piece. You think you are making progress, but every time you land on a new property, it's just another one of your own. All of this is woven in an endless orgy of mutual and shared ownership, where everyone has merged with everyone. It straight up looks like BlackRock's got an Oedipus complex, killing off JP Morgan and hooking up with Fidelity. So we're going to track the trail the old-fashioned way. We're going to do this primarily for the biggest player, hoping we get lucky. The biggest decision maker at BlackRock for the last 15 years has been Merrill Lynch, which owns 45% of BlackRock. If we didn't notice this at first on Yahoo Finance, it is because this is a result of a merger that happened in 2006. This being public information I found on the SEC's website. But now the question is, who owns Merrill Lynch? Well, in 2008, during the Great Financial Crisis, Merrill Lynch was about to go bankrupt. This led to Bank of America acquiring full ownership and turning it into a division. Alright, but who owns Bank of America then? Well, we find the usual team. BlackRock, Vanguard, and State Street. But this time, we get lucky. At the top of this pyramid of power, there's actually someone else. And I can guarantee you this is a lucky break, as it's one of 4 or 5 exceptions in the entirety of the US stock market. The number one shareholder of Bank of America is Berkshire Hathaway, the owner of Berkshire Hathaway being Warren Buffett himself. So if you try to calculate Warren Buffett's share of ownership in BlackRock, it would look roughly like this. He added up to 13.5% of Bank of America, which owned 100% of Merrill Lynch, which represented 45% of BlackRock. In the end, when we do the math, that means Warren Buffett could have owned up to 1/16 of BlackRock. What does this mean? Well, it means this is not the end of the story. It would be nice to know who owns the rest of Bank of America. To find this out, I searched for this information on DuckDuckGo. When searching the history of mergers and acquisitions in the US banking sector, I ended up finding another name, Amadeo Giannini. Let me break it down for you in about 30 seconds. So, in the early 20th century, Amadeo Giannini founded the Bank of Italy to serve immigrants and working-class Americans excluded by traditional banks. After the 1906 San Francisco earthquake, his inclusive lending strategy helped rebuild communities and grow the bank. By the time of his death in 1949, it had become Bank of America, the largest bank on earth. So we are essentially left with two names, Buffett, of course, and the Giannini family. Unfortunately, it is quite challenging to determine their exact position in the shareholders' hierarchy. What we can nonetheless still hope to do is try and understand the exact size of our discrete shareholders group. So let's go back to our shareholders map of BlackRock. If you're an individual investor and buy BlackRock shares on the open market, you belong to the white zone. If you're Larry Fink or any insider of BlackRock, you belong to the gray zone, and the only ones left are financial institutions. The first step of the algorithm is to break down each institution with its own shareholders. At level 2, you get more individuals, more insiders, and more level 2 institutions. Hidden in plain sight, Warren Buffett appears in those light brown segments. Then, we break down level 3 shareholders into individuals, insiders, institutions, and so on. We do this endlessly until we either collapse or reach this map, which distinguishes the total number of individuals in white, the total number of insiders in gray, and the total mass of circular ownership in black. This web of companies that own each other and seemingly dominate across the board. Since this is what dominates widely, the question now is to understand what this concept of circular ownership means. To understand that, I'll read and explain to you a 300-page long doctoral thesis on the subject. In 2025, this means ChatGPT will do it for us. So, can you please summarize the document I just gave you as if I were 10 years old?
Circular ownership is when two or more companies are connected in such a way that they end up owning each other, either directly or through several steps, creating a loop where no clear independent owner exists.
Okay, could you summarize it like I am 5 years old?
It is like a company acting as if it were multiple ones.
I hope now everyone understands. So, if we accept this reasoning, and all the shortcuts I took in the video, this would mean that the black is a mega company, pretending to be multiple ones. It owns BlackRock, but BlackRock owns it too. The creator of the algorithm ran the same calculations across various companies, and the results were consistent. If the outcome is always the same, or individuals or insiders never hold the majority, then it's the institution that holds the real power. Every board of directors is subject to it in the end. But where does it get all those financial means? Well, since it's a financial institution, those financial means are just yours, the money you delegate for management, along with your voting rights. In the end, the question of who is behind this circular ownership doesn't really matter, does it? The higher you climb, the harder it is to see who's actually above you. And the right answer keeps shifting the higher you go. What we should care about are their intentions, and they are actually pretty obvious. You might have noticed the so-called competitors now sound strangely aligned. Same words, same handshakes, same curated campaigns. Somehow, none of this is a surprise. You've known it in fragments, but what shifted is your sense of scale, and behind it all lies a quiet kind of surrender. The passive surrender of millions who hand over the money in exchange for comforting illusions. A widespread trust that others will manage our money wisely. This is the capital sin of laziness. It's not malice, it's inertia. They say intentions fade, but consequences don't. Collapse comes gently, dressed as progress. If you didn't enjoy this video, thanks for sticking around until the end anyway. And if you have any constructive feedback, feel free to share it in the comments. I'd genuinely love to hear it. For the rest, thanks in advance for subscribing. Wishing you all an excellent end of the week. See you soon.